Ladies and gentlemen, I'll be just let me know if you can now see my screen. I think we now have it running. So whatever message you have, just either you say it there or you can type it in the chat. So let's just, I want to know if you can see my screen.
Yeah, I can see your screen.
All right. So welcome everybody. Welcome guys and girls. I don't think there's any girl in the building. So welcome everybody. So we're currently looking at gold. We're currently looking at gold. Okay, you can see, I can see Happy Sunday, all right. Okay, so recording is on. Okay, so we're currently looking at gold, and it's going to be a very interesting, we've entered some very interesting times in the market. So we're currently looking at gold, and obviously, like I was already talking about it, not knowing that the recording wasn't coming forth. So what you can see is prior to this time, you can see that I have areas marked up on the chart, like where all these places where you see eyes, all these places where you see eyes, like here, here, and all these areas where you can see these eyes here. Now, the reason all those areas have eyes is because it is an area where the institutions have their eyes on. The banks, the hedge funds, the market makers, central banks, whatever, the big guys have their eyes here because there's a lot of liquidity sitting here. There's a lot of money sitting here in this zone. And if you don't understand the languages I'm using, don't get intimidated. Of course, it's only a matter of time before you begin to understand the language we use here, because we do not really trade using the traditional methods like the regular regular everyday retail trader support resistance. No, we trade using smart money narrative here, like what is the big banks doing, why are the big banks selling, and we want to make sure that we are selling when they are selling and buying when they are buying. We want to make sure we are doing the exact thing that the people who are making billions from the market are doing. We want to make sure we are doing the exact thing they do. So now we have this zone, this zone, this zone. The market is having eyes here. Why? Because overall, we are in a bullish trend. You can see we came from this long-term rally. You can see we came in from that. You can see we came in from that rally, and when we came in from that rally, the market went into a corrective phase, which ultimately is going to continue. So that is exactly why we have our eyes on those zones. So if we were in a bear market, overall, you have to be mindful of the fact that we want to trade with the trend that we can see in front of us. And this trend right now is a bullish trend. The market is going up. So we want to do what the overall market is doing. So for example, if it was coming down, making lower lows, we will be having our eyes on these areas of liquidity down here. We'll be having our eyes on those areas. But the reason we don't have our eyes on those areas for any reason right now is because the trend is still up. So when the market now reverses and starts coming down, that is when we want to take out the liquidity on the sell side. So the moment the market is in the bullish run, they want to protect the buys. They want to protect this buy liquidity, this buy here, this buy here, this buy here, and of course these buys here. So, and of course below it you have sell stops. So that is why we are looking for bullish continuation. So if we step down to the daily time frame, then of course we begin to see that, let me try to get this out of the way. Let me get all these things out of the way so that, it just makes more sense that way. So you can see within the week on the 1 hour chart, I found a sell somewhere. I found an order block somewhere where I wanted to sell. I wanted to be a seller at this level because it had all the criteria. It fit my plan as a sell market, as something I'll be looking to sell. So I had an order set somewhere here. Then my stop loss was right above this zone. I was targeting the continuation because of the fact that we had just traded through these lows, broken. Oh, okay, I clicked the wrong thing. We had traded through this low, broken this structure, of course, traded through this one as well. So I was looking to see a continuation to the downside to liquidate these ones here, to liquidate these guys here, all the way to the downside before pushing above. The market didn't do that, and that is why we are not trying to be right in the market. You want to just accept the reality of the fact that we can be wrong at any time, and that is why we have stop losses. So when the market did trade through this zone, of course, those of you who are with us already know that this becomes a breaker block, and the only thing we want to be doing is that we want to trade from this. You guys have not been seeing my, oh Jesus. Please let me know if you guys can hear and see me, please. Please, if you can hear and see
I
me.
can see you. I can see you, sir.
I can hear, sir, and I can see.
All right, no problem. Thank you. So, of course, in this instance, we want to be buyers here. And of course, we are targeting these highs here in this instance. But in this case, we didn't catch the trade. It's okay to miss trade. You will never see a day in your trading career where you stop missing trades. You will always miss trades. It always happens. Some trades, your strategy will not catch some trades. Some trades, you might be sick, you might be in the hospital, you might be on the road, you might just be somewhere and you're not available to take that trade. Anything can happen. So that's why it's always best to set alerts. So in this case, right now, we are watching this zone. We are watching this red zone, this last sell to buy model, this last sell to buy candle here, because they sold into this zone and then bought aggressively. So imagine those of them who were selling here right now, they would have been liquidated. So right now, we now have a break in market structure. Of course, this one here is our break in market structure because it's as a result of the fact that it gave us new lows. Now, equally, the break in market structure started from here. But because we are trading with the narrative of this order block in here, that is this zone, this area here, this area had already been liquidated by this area. So that is why we are not counting this as our break in market structure. The reason we are counting this as our break in market structure is because this zone here was broken by the orders in here, the institutional orders at that level. So that was what took out that zone. And that is exactly why we are interested in this as our break in market structure. So let's quickly take on tool. We mark down the break in market structure to the upside. And of course, right now, you already know that if we take our tool and measure this, we know that we are within the zone where we look for ourselves. We have to wait for this order block to maybe trade back in here or trade into this breaker block in here, because you might be waiting for the market to come down here and then it trades into this, because when you go down the lower time frames, you are going to find that there are very, very valid zones within here. So the market can equally trade into all these ones and continue going higher. So, but what we would love to see, of course, the market doesn't care about what we love or what we don't love. So what we would love to see is to see that price trades into this zone, gives us our entry criteria and breaking structure, and then we use that to look for trades to the upside. And of course, our first target is going to be 1834. That is going to be our first target if we get involved in this trade again. We're going to be looking for 1834. The reason we're going to be looking for 1834 is because there are a lot of retail traders. Just imagine how much liquidity there is here. Look at this zone, look at this, look at this. Just too obvious the level of resistance according to retail trading analogy. So it's too obvious, and of course, we are going to be interested in attacking that zone. And then if by the time we hit this zone, we can start looking for possible sells again, short-term sells, because this market, no matter what happens, even though it's going to come up to this zone, it's never ever going to just go boom. It will always come up, break, do something, and then continue. And in the process of the market doing all these things, we can take a sell to the downside when we have valid entry reasons to actually do that. So let's quickly make sure that we have this area cleared up. Let's quickly mark this as a supply zone instead of another block, because there's really no clear zone there. So let me take a look at that on the daily. Okay, so you can see on the daily, I can just use the whole of this candle, because this here is also an area. This is a buy to sell model here. So we can use this as our area of supply, and then we want to watch the market trade into this zone in future. And then this is where we want to take our first, we want to take some counter trend moves if we get the opportunity. And then, of course, we know eventually we're going to liquidate the orders here. You know, we can come here, come down, do a bit of this, and then continue back down. So in all these legs, in all these moves, we can catch some very nice profit there. We can make some money off of all those moves. So this is what we are looking at on gold. But for now, at the moment, I want to advise anyone to sell this move here. Don't come and sell against this candle. It's going to be very bad. It's going to be very disastrous for your trading career. Of course, by the time, I don't advise going down to lower time frames, though you can see the lower time frames are beginning to set up for you can see the candles are beginning to reduce. The volume is really reducing on lower time frames. You can see candles getting smaller and smaller and smaller. But same thing happened here. HSR. So you can see the candles getting smaller and smaller, showing that there is a depletion in volume, in bullish volume for the market. So this is exactly where you're likely to see that, bearish correction to the downside. And then, we begin to anticipate higher moves from here. So if you have very good reasons, of course, within the community, within the mentorship community, we have very valid reasons or very solid ways of trading that looks like this.
Anything.
All right, so that was so someone was I believe everyone is okay right now, because that sound was beginning to really get on my nerves. So right now, so this is what we are looking at on gold. We want to see a pullback and then a continuation. So within the week, you can see short-term sell. We can see short-term selling opportunities back into these areas, and then we continue the bull run. So that's what we are looking out for on gold. Which one is this? How come I have to go under my looking at FXCM? Okay. What was I analyzing here? All right, so let's get rid of this. So New Zealand dollar Japanese yen. Obviously, prior to this time, I had done my homework. I had to do my analysis because I had a wedding to attend yesterday, and then I had to just quickly get some analysis done because I knew I might be so busy I won't be able to get things done. So before we get on to the whole thing, let us clear up this entire chart. So obviously, if you can see very well, you'll know that we've been ascending. In other words, we've been pushing up. Just look at all this push. Or let me go as high as look at all this push. And then eventually we went into this type of correction. These are the types of correction that, you can see as, you can see as maybe a flag. The retail world might see it as a flag. And, they're coming to, buy this. Now, if you take a buy in here, you're not wrong. Depending on the rules, if you have rules to protect you, if you have rules that you follow, so you can come in here and take a buy, and maybe you target this zone, and when it comes back here, you start looking for the sell again, or it just completely breaks out and keeps going. But that is not how we trade here. What we are looking at is very simple. What we are looking at within the community is that we see this last high here. So let's take a look at this last high here. Let's take a look at this last high here. And then, of course, this structure was broken. This was a break in market structure as a result of whatever order block that we have in here. But as you can see, remember, when we are trading up, until the last low that gave us a new high is broken, we consider ourselves to be bullish. So you can see this low here, this low test candle in here led to us breaking our structure. So now, those of you within the community actually understand that this entire impulse is structure because it took out this high here. And then as long as you know that our trading rule states that as long as we are trading above this zone here, above this zone, that we are bullish in the market. So in here, whatever it is that was happening in here, we know that all we're looking for is bullish opportunity. So now that we have broken through, so now that we have actually broken through this zone, traded through it, you might say it's a wick, but then for us, wicks are also breaks in market structure. And because if you go down the lower time frames, you're actually going to find candles closing below those lows. So what we are going to look out for is that, first of all, we know that structure has closed below this point, and then we become immediately interested in this leg. This is the leg that we're interested in now, because this is the leg. If you notice, this leg here did not break through this zone. This leg did not break through this zone. This leg did not break through this zone. So we are interested in the leg that gave us this break, which is this one. This is where we're interested. So it means the institutional volume, the bullish, the bearish volume is in here, is within this leg. This is what had enough nerve and volume to trade through all of this zone. So what are we now looking for? What we want to see, of course, you'll be stupid to come in here and be taking a sell. Not really stupid, but very naive and amateur. So stupid is not the word. So you'll be naive to come in here and take a sell just because already this is already an overextended market. This is already overextended. And we had, why do I keep pressing this thing? And we had this liquidity grab here, taking out new structure. Okay, yes, this is a new structure. This is a new structure within the market because, as you can see here, so as you can see, we had this level here. Let me just. We want to see the highs that gave us lows or something. So this is, all right. So here we have liquidity got taken at this level by liquidity. So we took out the liquidity there. The guys who had sold this move down to this point, they got taken out. And now, of course, this leg here came and took out this level here. Of course, for us, this is equally a break in market structure. Of course, everybody knows that the reason it's a break in market structure is that it printed a new low within this range. Within this range here, it printed a new low in here. So it's a break in market structure for us. And then, of course, when that structure got taken out, then we now have this. Now we have this liquidity in here. We have money sitting below that place that has equally been taken out. So for us, that's liquidity being taken out at this level. You see the market taking out this liquidity. And then what do we now have here at this level? We have a break in market structure right at this level. So for us, this is where our structure breaks, bust down. So this is where our structure breaks. And of course, this leg here, this leg is where we're interested in, because this is where we had, what is the color? Okay, so let's manage yellow, right? Or should I make it gray? Okay, yes, gray is better. So this is the leg we're interested in. This is the leg that gave us that new structure. And of course, let's just, by the time we take our darling tool and then define the discount and premium pricing, we know that from this point to this point, we are not going to try to sell anything here, because that would mean we are selling at the discount. And of course, we want to sell at the premium, which is the premium pricing, the higher price. We want to sell when the price is high, and we want to buy when the price is low. So obviously, we're not going to be selling anything within this region I just marked up. All we're going to be doing in there is, if you're going to be taking a counter trend move, if you want to buy, that will be the point where you might be interested in buying. If you see anything that fits your plan, you can get involved in a buy from here to here, and then expect to take it into the premium region of the range. So now, if we are going to look for other blocks to sell from, we are going to look for only other blocks that are within here. Any other block within this place, any bearish order block within this place is considered a trap. So this is where we're going to be looking for our order blocks when we go down lower time frames. So lower time frames, no clear order block, except this one looks like an order block sitting right at the 50% level. Still very valid to take a sell from it. Very, very valid to take a sell at the 50% level. And of course, we are going to be interested in two areas here. We're going to be interested in this block here, and we're interested in this block here. So since it's our sell region, we just put that at red. This one, we put it at red. So obviously, you can see how we can take a sell at 50%, now we're looking to take a sell anywhere within this. I'm sure if we switch that to the optimal trade entry, where does that leave us at optimal trade entry? Okay, optimal trade entry is within here. I think this is still within the 70% retracement. So it's still a very valid zone for us to look for a sell from. So discount. So this is what our trade looks like. So let me quickly see if this is mitigated. All right, so this is what our trade will automatically look like if we, so by the time we take this out, you can see how we frame the sell. And of course, within this, we can actually, but these are actually high risk buys because enter the waiting room. So, so these are actually, please let me know if you guys can still hear me. So I won't just talk. Just let me know if you can still hear me. All right. So these buying in here is actually it's actually a high risk buy because of course this is a very strong downtrend and you might anything can happen. You can still just do this and then come here to before going down. So it's just not something I'll be very comfortable with taking. So by the time we go down to lower time frames, of course, we don't have any break of structure. Now, if you want to take a buy right now, there is no valid reason for you to take a buy here. There is absolutely no valid reason. Any buy you take here is high risk because we still have our bearish structure standing strong at this level. So this is where we have our bearish structure standing strong right at this level. And as long as we have that bearish structure standing strong at that level, you have absolutely no reason whatsoever to be taking a buy. Just so, except we have something that looks like this, somewhere within here, if we get a valid reason, we can now take it long.
You can buy into the point of interest.
Well, yeah, of course, but of course, that's because we are not going to buy into any points of interest just yet because this structure is still standing. The liquidity here is still standing. Looking at this is the 30-minute chart. So as long as we don't have any break above this zone, anything weaken above this zone, because this is a high, this is a strong high, and this is a weak low. Right, so this high here created a new low, broke through this low and created a new low. So until we get something that takes out this high here, then of course we have no reason to be looking for short-term buying opportunity or looking for any short-term, counter trend moves to the upside. So that is that about that. So I like to quickly I'm trying to be as fast as I can, so that, but I just believe you're taking away so much value from this. Okay, right now, if we go down to lower time frames, I think I become more interested in this POI here because this one officially comes into the premium region. You can see obviously right now this POI here is within the premium region of this swing or this impulse. So you can see this is a 30-minute, and we found that this POI has officially gone above the 50% level and it's within this zone. So if we take a trade here and take a loss, if we come here, take a sell, counter in line with this trend, and then it gives us a loss, it's a trade we're going to take anytime, any day, because we know it meets our plan, it fits our plan, it fits our trading rules. But if you come here and take a trade, for example, and then you take a win on the trade, you actually took a the trade, please, someone's phone is vibrating. Could you please take care of that? So if you take a trade within the zone and, for example, it ends up running into 4%, you didn't follow your plan, you didn't follow your rules. And it's not a very nice way to actually trade the markets. So that is what we're going to be looking at. So this POI on Kiwi Yen, very, very solid for taking sells. Very solid for us to look for selling opportunities, as we, move into the coming week. So that's what we're going to be looking out for. So I use this to illustrate the swing, so I can get that out of the way now. Now I can equally get this out of the way, and this is what it looks like. So obviously, we can now see how this looks. You can see if you were those retail guys, they could have this like this. and something like this. But at the end of the day, you have to have very solid reasons. And then let's say you have that, and then you're aiming for, let's say you trade using that retail method, and then you have something that looks like this. Let's say you draw this trend line like so. You have a trend line, something like this, and then you draw this on. Now, if the market really, and you're expecting the market to trade to the top of this channel, which is a possibility, but if the market gets to this point and then runs off, you might not really know why that is running off. You might not really know why the market is not fulfilling this channel that you're drawing here. So the reason we trade smart money is so that we can know why what is happening at each given point in time within the market. So that's Kiwi yen. And Euro USD, always a very major pair that people are interested in. So of course, I had this on my watch, and as you can see, there was broken structure within this zone. You can see we have a break of structure here. I've marked that on because why is it a valid break of structure for us? Because this swing in here took out this low. So this was a strong high, strong enough to give us a new low and take out this one and printed this new low. So now that we've liquidated this zone, we might be looking to see the market come into this zone, come up here before we start looking for those sells on Euro USD. That's on the 30-minute chart. So, but one thing we do want to make sure is that we emphasize on market structure, and we are paying enough attention to the structure of the market and to order flow and to where the money is actually flowing within the market. Now, why I had this zone marked up earlier is because I like to have a liquidity zone just before my order block. So now if we take a look at all this swing, it's very easy for you to get carried away with. Take a look at it. Okay. Yeah. So we have this swing from here to there. See how we just traded into the 50% of this zone, and then we sold off. So like I said, anything happening at 50% is valid enough for us to take the entry. Very valid. 50%, we can take the trade. But below 50% within here, we're not interested. So now we have the market printing a new low. Remember, this market came here, didn't print a new low from here. This market printed the new low that took out the structure from this point. However, because if you decide to take this swing, if you decide to take it from here to here, decide to take it from this point to this point, you have an unmitigated zone. I think I did mark that up on, maybe was it the 30 minutes or the 1 hour? I think it was on the 1 hour. Okay, yeah. So we have this zone here, this buy to sell, because this is a buy to sell, just that, you know, it closed red, but this is actually a buy to sell. I'm sure you can see that clearer on the 30-minute chart. Okay, yeah, so that's it. So we have this order block sitting within this zone. And personally, I don't like to take any trade that puts me within liquidity. And of course, I have this obvious liquidity sitting above this zone. I have liquidity. This one has been taken, but I have this obvious liquidity sitting here with an unmitigated, sitting behind an unmitigated order block. This is not something I want to trade. So I would completely disregard this entire swing. I'm just trying, something is picking up my system here. Okay, sorry, just a minute, please, guys. Just a minute. I'm trying to find something here. So I would disregard this entire swing because of this zone here. And of course, I have this order block in here. So I would prefer to have, and of course, right now you can see it's becoming valid because we've taken out this structure here. And now we would want to take out this one here. We want to liquidate these guys here. Let me just get it out so it doesn't come to stuff, so it doesn't become too messy on the chart. So let me get this out of the way. So now we have a new high being taken. Then we have liquidity sitting below this point. I like to see the market take out this liquidity here and then use that to run these highs, probably as a high of the week, and this comes down the coming weeks ahead. So that's what I'll be expecting to see on Euro USD. That's what I'll be expecting to see. You know. But then if it happens that we get to trade above it and keep going higher, of course, we're inclined to take in such a trade. But just reckon with the fact that on Euro USD, we have a very, very strong area here. Look at this bearish breaker block. Look at this breaker block here. and the market traded through it. And look at this impulse. We just look at how deeply, except we trade above this zone, close above this breaker here, and of course take out this liquidity high. I will not be inclined to looking for anything that is, going to usher in higher prices, and probably to take out these highs within this zone. So that's what I'll be looking at on Euro USD. I think let me just get rid of only the brushes and let the rest be. All right. So I think that's the only thing I'll be looking at on Euro USD. So quickly, I have CAD yen, very wonderful trade. I have CAD yen, in fact, this would probably go down as the worst miss, because I missed an entry all the way from up here. I had this zone framed out and then I missed it. I think it was morning prayers I went for, and by the time I came back, the market was gone. Yeah, I was trying to trade from this zone here. I was trying to trade from here, and the market just ran off. But if you're a professional, you know that you will always miss trades and you will always have new opportunities to trade from. And that is why I'm looking to trade from here for a very quick one-to-one, if I'm 1.5, if I'm going to get it. But one thing we do know for sure is that if we look at the big picture, let's get everything off the way on CAD Japanese yen. So what pairs have we looked at? We've looked at gold, Kiwi yen, Euro USD, and Canadian dollar Japanese yen. So if we look at this, we obviously see our structure. We can obviously see our structure pushing higher and higher. However, while our structure is pushing higher and higher, we want to reckon with the last structure that got broken. And that is here. Now, since we know we have a new swing high within the range, one thing we know is that we don't want to trade anything below the discounts. So you can see that between here and here, all you want to be doing is selling. Between here, all these places you want to be selling until we get into this region. That is when you start looking for order blocks that could possibly take you to higher prices. But as long as we are within this region, all you want to be doing is selling. This is overbought according to RSI and all whatnot. So right now, of course, if we now take a look at this, we want to see something very interesting. And what we can see obviously is that we have this order block. We have this order block here already formed and created. So just look at how beautiful that looks. So you can see this one is a very valid order block for us, and of course a very solid weekly candle closing below. So one thing we are going to anticipate is, of course, trade within here and then continue down to lower prices. It's just that simple. So this is exactly what we're expecting on Canadian dollar Japanese yen. And if you want to take a refinement a step further, you want to maybe take it from the 50% of this level, then you can maybe look for an order block on lower time frames. So let's see if we find something on lower time frames. On lower time frames, what do we find? So on lower time frames, you can look for something within here. I'm trying to find something within that zone. If I don't find, of course, maybe, well, okay, there's a breaker block in here. So that's actually a very valid one to trade off of. So you can see how this tiny one looks here on the 30-minute chart. And then here as well. Now, there's one thing I want to tell you. There is no way to know the correct order block the market is going to hold from. The only thing you can do is have a set of rules around picking your order block. And my own set of rules is I don't want to trade any order block that is not within discount or premium region, depending on which side of the market I'm going. So, and this is actually above the 50% level of this entire weekly order block, this order block from last week. So that is exactly why I'm looking to trade. So if you want to measure that, this is from the previous week, this is the high. So this is the low, this is the high of the previous week. So this is the order block that was created on the weekly, and then this is an order block within the weekly order block on lower time frame. So this is what you want to look for your trade from. 15 minutes.